This is a recording for homework for Chapter 2 for Essentials of Corporate Finance. The first homework question was problem 1, building a balance sheet. So they give you information. The company has current assets of $2,170, net fixed assets of $9,300, current liabilities of $1,350, and long-term debt of $3,980. It asks you what's the value of the shareholders' equity account for this firm and how much is the net working capital. So step 1, I'm going to create a little balance sheet here. So I'm going to type in current assets, and then the current assets given in the problem was $2,170. I'm then going to type in net fixed assets, $9,300. Total assets. I'm then going to total these two. So that's my total assets. Now on the other side of our balance sheet, we know we have current liabilities, long-term debt, shareholders' equity, and total liabilities and equity. Now, if we go back to our accounting equation, which I'll put down here, assets equals liabilities plus owner's equity, which is also shareholders' equity. So, if that's the case, then what we know is total liabilities and equity must equal assets. So I'm going to hit the equal sign and put it over here for the total assets. Also given in the problem was the long-term debt. And our current liabilities of $1,350. So now what we need to solve for here is shareholders' equity. I'm going to highlight this in yellow. We know we need to solve for it. So the next step is, the only thing missing is shareholders' equity. We have total liabilities. So I'm going to hit equals the total liabilities and equity minus current liabilities minus long-term debt will give us our number for shareholders' equity. So in this problem, shareholders' equity equals $6,140. It also asked us what our net working capital is. Well, our net working capital is current assets minus current liabilities. So current assets minus current liabilities. And that is our net working capital. The answer to problem 1. The next problem we have in Chapter 2 is problem 5. I already did some work here, so I'm actually going to clear my screen. Problem 5. This is talking about market value and book value. Klingon Widgets purchased new cloaking machinery 3 years ago for $4 million. Now if they purchased it, that's historical cost. So that is book value. The machinery can be sold at Ruhlman's today for $6.2 million. The current balance sheet shows that net fixed assets are $2.8 million, current liabilities are $710,000, net working capital is $130,000. If all current assets were liquidated today, the company would receive $825,000 cash. What are the book value of Klingons assets today, and what are the market value? All right. So, first I'm going to create a balance sheet. Current assets, net fixed assets, total, we'll skip a few lines here, total assets. Then we have current liabilities, long-term debt, shareholders equity, Alright, just doing some formatting here. And we were also given net working capital in this problem. So we know net working capital from the list is $130,000. We also know that we have current liabilities of $710,000, and we have net fixed assets of $2.8 million. So, this is what was given in our problem. Well, I know that the formula for net working capital is current assets minus current liabilities. So I know I can currently solve for current assets, which equals net working capital plus current liabilities. So I have $840,000 in current assets. Now that I have current assets, I can also solve for total assets, which is current plus net fixed assets. I'm highlighting these in yellow to let you know that we solved for these. Now, once I have total assets, like in the problem before, I know that total liabilities and owner's equity equal total assets, right? So, the question becomes, how do I figure out book value of assets and book value and market value? So, book value. We have enough information to solve this problem. Book value. We have current assets net fixed assets total assets. Now, to figure out our market value, it says that if we liquidated all of our assets, we would have $825,000 in cash. $825,000. 25, 1, 2, 3. It also says that the market value of our machinery, which is our net fixed assets, is $6.2 million. So our total market value is current assets plus net fixed assets, or $7,025,000. As you can see, there's a large difference between market value and book value here. So we solve for these. Moving on to problem 10. So, we're calculating additions to net working capital. In December 2009, the balance sheet of Anna's tennis shop showed current assets of $1,015 and current liabilities of $870. In 2010, the balance sheet showed assets of $1,230 and $905 in liabilities. What was the change in working capital? So the first thing I'm going to do is I would set up the years, which I already did for you on the spreadsheet, 2009 and 2010. And then I would do current assets for 2009 was 1015, and for 2010, 1230. Then over here I'm doing current liabilities, and we had 870, so net working capital 2010, and our calculation for net working capital is current assets minus current liabilities. So I'm going to take 2010. Current assets minus current liabilities. And my net working capital for 2009 equals current assets minus current liabilities for 2009. So my change in net working capital equals ending minus beginning. Had a little typo there. So equals minus beginning, or $180. That is our change in net working capital. We solved all three of these. All right, number 11, cash flow to creditors. So this was something that we talked about on the last recording, and now we're going to go forward and calculate cash flow from creditors. So December 31st, 2009, balance sheet of Schism Incorporated showed long-term debt of $1.375 million, and in December 31st, 2010, it showed long-term debt of $1.53 million. On the income statement, it showed interest expense of $91,500. What was the firm's cash flow from creditors during 2010? All right, cash flow from creditors. So, what is our calculation for cash flow from creditors? It is our formula is interest expense minus net new borrowing. Okay, so interest expense. Their interest expense was $91,500. Net new borrowing. Remember our formula for net new borrowing? It was ending minus beginning on our long-term debt, which is 153,123 minus 1375123 zeros. So, cash flow from creditors equals interest expense minus net new borrowing, or minus $63,500. Moving on to problem 13. Calculating total cash flows. Given the information from the previous problem, suppose that you also know that the firm's capital spending for year 2010 was $910,000, and the firm reduced its net working capital investment by $120,000. What's the firm's 2010 operating cash flow? Now we've already done problem 11, but we have not done problem 12. So, what I would do is I'm going to actually go back in here and calculate problem 12. So I'm going to add a spreadsheet because we're going to need the number from problem 12. Chapter 2, problem 12. And I'm going to insert a text box here and just type the problem for you. Okay, so it says that December 31st, 2009, the balance sheet showed $135,000 in common stock account and $2.6 million in additional paid-in capital surplus. In 2010, the balance sheet showed $145,000 and $2.9 million in the same two accounts. If the company paid out $140,000 in cash dividends in 2010, what was the cash flow to stockholders? The first thing we're going to do is set up the cash flow from stockholders to stockholders. Cash flow and our formula is dividends paid minus net new equity. So, dividends paid, and they paid $140,000. To find net new equity, we must find the change in equity. So, my 2010 equity here was $2.9 million plus our additional paid-in capital account of $145,000. Our 2009 equity was 135, our 2.6 million in shares plus 135,000. So my change in equity is $310,000. So, net new equity is equal to my change in equity I'm going to insert one more row so there's a little cash flow to stockholders. Equals dividends minus net new equity, or minus $170,000. I'm going to need this for problem 13. So, problem 13 says, given the information in problem 11 and 12, suppose you also know that the firm's new net capital spending for 2010 was $910,000, and the firm reduced its net working capital investment by $120,000. What was the firm's operating cash flow? Now, remember our formula for operating cash flow. Equals. And if you're not sure, you can check back here. I'm still working on how to operate this, so I need to flick back to another sheet. So I'm going to stop this and then record another one.